And we are live and amazingly starting on time for the first time in a couple days. Computer, although going slow, actually got us online today, so that's a good thing. Hope everybody had a great trading day today. It was there were a few setups that were pretty good that you could have capitalized on. I wish I could have traded at the open, but it was ended up being a little bit difficult because I was in the factory all day doing stuff, so wasn't able to catch the open. But here, let me switch this over. We're going to talk about Andrews Pitchfork tonight, which is going to be cool. Before I do that, though, the best way to do that, I think, is with just regular bar charts, right? So you just go to Style, bar, and just do regular bar charts where they show, the left side is your open and the right side is your close. And yeah, these are great too for doing Elliott wave stuff too. It's easier to count waves, because it gets a little cluttery with the candlesticks. But the candlesticks, have their own, good stuff with it too, right? Oh, look at JP Morgan went inside day. It was, wait, is that double inside day? That was the hourly, sorry. Yeah, it was an inside day yesterday. Hold on one second. Wait, what am I doing? Oh, I'm going to use this. Sorry, I'm going to use this for when we start talking about Andrews Pitchfork. Let me go back. All right, so I'm going to keep that there. I'm going to go back to the daily. Okay, yeah, so what did JP Morgan do today? So we had an inside day yesterday, right? Inside shooter, and look what happened. Opened probably just slightly above the view up, went up, and as soon as it crossed the view up to the downside, took the inside day down, and look at that. That was good for 109.10 all the way down to, oh man, 105.98. So, 3 points on JP Morgan. So that was a good one if you're following the double inside days. Roku, not so fun. There was an opportunity, if you caught it just slightly for a few pennies to the upside, you could have taken it back in to reclaim almost half the range, and then it tried to reclaim the top end at the end of the day. It kind of settled out at the top. Little tricky to trade, but possible to make money on that today, but very difficult. What else do we have that was interesting? Tilray, right? What did Tilray do? Let's see, Tilray. Yeah, I mean, obviously gap down, double inside day, right, to gap down. Like it tried to touch the range, let's say high of 109, low of 109. Look at that, it hit it to the penny, closed the gap to the penny, and then came back down. So you could have done that, as a strategy too for double inside day, right? Try to test the range, failed, took it to the downside, and that was good for, 10 points. So that would have been pretty awesome too. Yeah, so plenty of stuff to look at today. That's why we keep the game plan relatively condensed. I'm going to have a bunch of stuff to look at for tomorrow. Obviously, Tilray is going to be on it. Macy's, I don't even know if I posted that at some point yesterday, but we'll look at that. Ameritrade got an upgrade and came back in today. That'll probably be on the game plan tonight. And of course, we want to see what Baba's doing. It seems to still have some energy with it. Goldman Sachs, goodness gracious, with that huge drop at the throughout the day, and a bunch of stuff moving on, like some earnings, things like that. So yeah. So without further ado, let's talk about Andrews Pitchfork. Okay, it's you can find it in most trading software. Thinkorswim, they have it. TradingView, they have it. And basically, so Alan Andrews is sort of one of those. He's sort of a mythical type character in the world of investing, right? So like he was pretty kind of little known. He was an engineer. Basically I think he went to like MIT and like Harvard and all that stuff, and ended up basically working with another fella. What was his name? Famous dude, Roger Babson, who was these guys were MIT guys, right? I mean, so they believed, and I also think that there is some evidence to show that there's certainly there's physics involved in a lot of the movement of the markets, right? And so I mean you notice it takes a long time for it to come up, but when it comes down, it just seems to just crash, right? So it's like almost gravity is is working against price in a lot of ways, right? And of course there's heavy mathematics and understanding of momentum and movement and velocity. I mean, all that stuff is involved, right? So And that's what, but you don't have to know physics to be awesome at trading, right? I mean, just like you don't have to know physics to be like an awesome race car driver, right? So you could still maximize it to your potential. You just have to really, kind of either, be a natural at it or just get good at it, right? This is sort of like driving a car or riding a bike, right? So anyway, so he worked, he had trend lines, and he didn't share it until I think after he retired, a millionaire, and started teaching classes, on drawing basically these lines and using, essentially trend lines. And he did some other stuff too that was pretty cool, honestly, that I need to explore a little bit further. But I posted a link. I think I posted, I've got a link here in the YouTube. If you check out the YouTube title later. And I also put it on Twitter, just so you guys can check out, like read a little article about him. He's got his whole course that he used to teach that used to be something like $1,500, and it's free. It talks about Andrews Pitchfork and stuff like that. So, but he did some other pretty cool stuff in addition to the pitchfork. So I'm going to show you here, like he would do like this line here would be up, and he did action-reaction lines. So you'd take this bar and put it out here, and then do it equidistant, basically out here. And what he said is that could be like that formed into the line of like an important pivot line that could happen later. So stuff to look at. So anyway, as you guys know, one of my favorite time frames to trade on is the hourly. If you do these charts on the daily, right, obviously it's not going to move as fast. Some guys like to use the 15-minute on these, so you can do that as well. I just like the hourly. It looks pretty good here. So a lot of stuff I've been posting on Twitter has been through TradingView, but you can do this through Thinkorswim. Just look up Andrews Pitchfork. It's right here if you go down to Quick Tools, so where that little hand is, or whatever you guys use next to these zoom in, zoom outs. So it's this guy right here, this little pitchfork. See, Andrews Pitchfork. And it's funny, see how they spell it right there with the apostrophe at the end? I'm pretty sure if you have you only put an apostrophe at the end of a name, or at the end of with an S at the end, if it's plural. But Andrews is not plural, so it looks funky, but that's why the title has the apostrophe S at the end. I remember learning that, I think in 9th grade. So anyway, love you, Mr. Simons. Anyway, he's the best. Anywho, so anyway, the idea is for basically drawing pitchforks, you use pivots, right? And so here you can, I mean, it's pretty obvious. Here, I'll take this off. It just looks so good. Clear that. Okay, so you look for pivots, right? So, and then you look for something essentially reasonable to draw a line through a pivot, right? So picking this as a pivot, you could do, what you do is, so you go here, you put your line here, there, one there, and then you go to the one pivot and then to the next pivot, right? And you can see, basically the idea, I mean, look, it's pretty solid, right? So, so imagine, let's go here, imagine you had drawn it here, right? Well, let's say the pivot was in, so let's say it was there, right? So here you're trying to figure out direction, right? So you draw your Andrews Pitchfork and it kind of comes up, up, and up. And then from that point, right, what do? Well, I mean, you would assume at that point it's going to try to make some attempt at the median line here. Right? That's called the median, right? So look, it did. It made a pretty solid attempt, right? So it kind of followed this line up as a trend line, and then once it broke, right, then it broke to the downside, right? And so another thing that you can add to these, and it's easy to do this in TradingView. Let me see if I can do a GAN fan. Let me see. All I do is like a pitch fan in TradingView, but in here I'm not sure. Let me see what this will look like. I don't know how funky it's going to be. No. I mean, Fibonacci's cool too, but anyway, the idea is you draw a line that connects here, this point to this point, and this point to this point. And those become further trigger lines. And so I'm going to try, let me just look real quick and see if I can find one. I'll just do this for now. I'll just do like a regular line. I'll extend it out. Right. This. I don't think that would still be extended right. Okay, so that kind of creates that fan. And so from there, that becomes a new trigger line. And so, right, you see what happened here, it went sharply through that line, right? Now it's become resistance, right? Now it's just kind of hanging out, right? consolidating, right, into like a channel or whatever you want to say. So that was that one. But you see how it works, right? I mean, you see how this could improve your trading if you use this. Trend lines are tricky to draw. It's tough to pick, like, because all you do, especially when you're beginning, if you're like me, all you do is you pick like a line, you just pick like 2 pivots, and and usually you go to the most recent one. Let me just click clear the whole thing. You go to the most recent one. See how when that goes away, you kind of lose some perspective. So I think if you guys start using this, it'll help your trading. So you go there, and you're like, okay, so what? So what? You know what I mean? It's solid, but I mean, it's a trend line, but it only gives you kind of half the story, right? So let me do one more here. I thought this was pretty amazing here because I just did this to get ready for the little tonight's call or tonight's video. Anyway, I see I put one there, top of the pivot, there, and then there. I thought this looked pretty amazing because I was drawing. I kept on tweeting. I was like, I think it's gonna get to 1,000. It's gonna or somewhere between 1020 to 1010. But then the way I had it drawn earlier. But when I looked at this, I was like, you gotta be kidding me. This is awesome. So you go here, 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 right? So look what it did from this pivot. Imagine you drew it initially there, right? Okay, the pivot's in, right? And then you like start looking at it, you're like, oh my goodness, look at that. Look at that. It banged that median line to the tick. And then look what it's doing. Before, right, when we looked at it before, it looked like just straight, consolidation into a channel and all that stuff. But look what it did. It ran right into that resistance trend line right there. And it created a trend line, right? So I mean, you see, without this, like, it's hard to think that, right? I mean, unless you get like just super adept at drawing these things, right? Because you look at it like, what do we do? See, like, oh no, what's going on with the world, right? But here, a trend line there. I mean, then you're like, okay, what do I do? Draw a trend line here. It's like, okay, cool, I'm consolidating the channel, right? So what, right? I mean, yeah, it could break to the upside and you're good, break to the downside, but I mean, I just think this is just so powerful. And it really is proving, I mean, we're nailing these, these targets on this thing. Especially if when the market's like this and so volatile and like so pukey, I mean, it just makes it so much easier to look for shorts, right? So here, when you look at that, look at here now, we're in this, when this channel hits there to the tick, and instead of just kind of consolidating or going into a triangle, look what it did. It ran right into resistance, and look at that. It ticked it right there and then came down. So what do you think might happen? I mean, I think it might possibly, what's it going to do? Go to like 160, 162? I mean, if it overshoots, you think it can come back in? I really think this thing, especially if we're, futures or Nasdaq's up a little bit, but Google's down. Well, whatever. It's kind of flattish. So I'm watching this tomorrow for real. I mean, this thing, if it hits that 162 area, or even just is real weak, it comes in and to the downside. And I've got one more juicy thing here to add to the, and you guys probably already see me tweet this, but if not, what do we got going on here, my friends? Double inside day for Google. And so I guess this is a good opportunity here to review the double inside day strategy, right? And the idea is, when something goes inside on any bar, right, the longer the time frames, the more helpful, the more potent, right? The shorter ones are tougher to do, especially on a heavy spread stocks like Google, but really tricky stuff. But on these bigger bars, right, the inside bar means indecision, right? That means, like, because here, look, you can say here it took this bottom one down, right, but here it went inside. It's like, oh, I don't know what I'm going to do yet, right? And then when it goes inside again, it's like, I really don't know what I'm going to do yet. And so, so at this point, the strategy is, right, remember there's 4 scenarios that for double inside days, and I should probably post this to the rules on Twitter at some point, or at least, or just do a separate article on double inside days so it's a little bit clearer. Because I've done a bunch of videos on them, but, if those aren't clear, sometimes it's nice to just have like a little reference, right? So the idea is here, you can see I've got my high-low, which again, if you haven't seen me do it before, you just go to Thinkorswim, edit studies, and then you can just go, daily high-low right there. You can click that. And that's what that is. I just customized mine to be green on yesterday's high, or today. This is today's high, right? This is what it'll look like tomorrow. But this is the prior day's high, prior day's low, prior day's high, prior day's low, right? So when they're inside each other, right here, you have 2 inside days. And so the idea is you have 4 scenarios, right? We could gap up tomorrow If you gap up, then I don't chase a gap and go unless there's news on it, right? So you look, if you gap up, you look to trade it as it comes in, because the further you get inside, the more price discovery it wants to do, right? So you can almost anticipate that it's going to get to the other end of this inside day at the very least, right? So if you gap up, you short it as you go into the range, right? And your first target is going to be about halfway, wherever the VWAP is, right? Is your first target. And then once you get below it, you trim and trail, move your stops, and then you look to try to, your next target is going to be the bottom of the range, right? And if you hit that, you're awesome. And if it breaks through, like the exporting goods did the other way to the upside, it just kept going, right? And so that was an awesome trade using the double inside day strategy, right? And so here, it also went inside 60 at the end of the day, which is pretty cool too. So look to see how it handles this bar as an anchor bar too. So I think Google's going to be interesting to trade tomorrow. Anyway, the other scenario is you gap down, which it looks like it's possible. I mean, who knows? Let's see what the future's doing. We gap down, then you do the exact same thing, right? You don't chase the gap down unless there's news, right? And you look to trade it back into the range. So as it comes in through this lower range, you trade to the upside, first target about halfway or the VWAP or so. Staying green, moving your stop up, trimming and trailing. Once you break the VWAP, you've got a chance to get even higher and explore the higher end of the range. Okay, so those are two scenarios. The other two are as if you open inside the range. So let's say we open in here somewhere, right? And that's where you use your VWAP as a guide. So if you are above the VWAP and the market is strong and the futures are pointing up and the market's ripping and all that stuff, this is a good place to go long, right? Because what does it want to do? It's going to want to test that upside of the range and with the market going, right? And you put your stop below whatever the low of the morning, as long as it's sense, right? Make sure it makes sense. If there's a big tick down here, you don't want to put your stop there. You don't want to do that, right? But again, if it's down and the market's going down and things are getting real pukey, right? You do that. You put your stop at the top of the bar to the downside. And you shorted the downside with the first target at the low of the day, right? Or the prior day's low. Then you go for the other day's lows as your next target. So, but yeah, I mean, this is looking good. So that's kind of Andrews Pitchfork in a nutshell, and I like it because we're slamming into that resistance. We're slamming into that resistance, and it corresponds with a double inside day and an inside 60 at the close. So let's see how this thing handles this tomorrow. I'm really liking it to the short side. I want to see what it does. Even if it overshoots this a little bit, I think it comes back through. Then I definitely think it could get to the low end of the range either by Friday, within a couple of days, definitely. So just watch out for options because of if you buy this week's options, if you're holding it overnight, you could potentially get some theta burn, the time decay on it and all that. So, but yeah, this has just been a very interesting market, and like you say, with the Elliott wave, I mean, it looks like we could be starting a third wave down on the whole index itself, which would be pretty cool to the downside. So plenty of shorting opportunities with that. So that's pretty much the basics of Andrews Pitchfork. Real quick though, another way to trade it, just so you know, I talk about pivots. So that's pivots around this median line are very important, right? So if something's coming up and then puts let's say we're coming down and then put a pivot here, right? You would expect it to go back to the upside, right? And the same thing, let's say this comes down here, right, tomorrow or whatever, and then pivots back up, that means it's probably ready to come back up again, right? And so that's why I look at pivots. And then you can do that again around your trigger lines, right? So that'd be a trigger line there, extend that to the right, and then we'll do a trigger line here, extend that to the right. So these are trigger lines, right? So again, if it were for whatever reason, right, and then that kind of marks pretty solid resistance here on the horizontal line. So if it were to come up here and then break out, then that should be pretty strong, right, over this trigger line. So pretty cool stuff from our friend, the late Alan Andrews. May he rest in peace, and thank him. Thank you for publishing and coming up with all this stuff, because it looks like it could be very helpful, I think, to anybody's trading tool belt. So a little bit longer there than when I normally go through charts, but I hope that quick 20-minute lesson on on Andrews Pitchfork was helpful. At this point, if anybody has any questions about it from just how I look at it, or if we want to start doing some chart requests, we can do that too. Yeah, what's up, Duraj? Yeah, UTX double inside day. Also tweeted by or talked about the other night by one of your friends. Yeah, good old UTX it. Again, I've never traded it before. At least I don't think I have. It's very, but yeah, double inside day. So you can trade it similarly, right? I mean, looks like it's a little more. What kind of options does this have? Yeah, it does have weeklies. There's not a lot of volume on the weeklies, so I definitely don't recommend trading options on this thing. And if it's not too spready, you can try the double inside day strategy. The only reason I didn't post it is because I don't trade it, right? I mean, it's just not one of those momentum names. But if you guys are comfortable trading the stock and have traded it before, you can definitely try the double inside day strategy on it. Just be careful, right, on breakouts to the upside and downside when you start in the middle of the range. That should be your first target, is the top of the range. So if we open here, your first target should be there. Buying the breakouts on it is very difficult because it is resistance, right? So you could try to buy a break there, and it just comes up a little bit and then comes back in. That happened on Roku today. So just be careful with the tops and bottoms, right? It's better, in my opinion, it's better to gap up or below it and then try to trade it through the range. Because when it gaps like that, it needs to discover price. It really does. So something to keep in mind. But yeah, good look there, Jiraj. But yeah, if anybody has any chart requests tonight or questions, it doesn't have to be about Andrews Pitchfork. Just any whatever. That's what I'm here for, to share what I've learned and to help our community. So help make everybody a better trader because nobody likes losing. And today was a tough day. I mean, there's no doubt about it. I mean, it was. I didn't make a single trade today because I was busy this morning. I came back, I kept looking at it, and I was like, all right, maybe I'll set up. I think I tweeted. I was like, I think at one point I was like, look at Google. And what did it do? It was down here. Look at that. It was down here. Right? It went inside 60, double inside 60. Right? And I was thinking to the short side. Right? I was like, Amazon was getting low to its low of day and all that stuff. Everything was pointing down. I was thinking to the down, double inside 60 to the downside. Never happened, right? So I think I tweeted it. We were down here, and then by then we were back up here, right? And then at that point, I mean, you could have gone long. If you were watching, I just wasn't watching as closely. I was just slammed today, and so you could have traded that to the upside. A break here, as long as once it crossed over that VWAP there, it stopped down here. Of course, it's expensive on Google. You don't want to, just handle your risk accordingly. Then it goes up, and boom, hits our Andrews Pitchfork resistance line. So yeah, I mean, just tough market today. So I mean, if you're sharp and you're on your toes, and you can catch stuff like this. So, and there was a lot of good stuff from the game plan. I think I've got some good stuff too. Yeah, YOLO, what's going on? Yeah, so Home Depot worked. Did you do that on the 30-minute orb? Because yeah, it was pretty awesome. So. Yeah, so on day 2, right, on a gapper, you have your 30-minute orb here, right? When inside 30, you could have traded it off of that to the downside. That was your inside bar there. Or you could have just traded it off at this point here. I made a good short off of that. I mean, never would have stopped you out and ended up below 181 and went all the way down to 79. So, I mean, a good 2-point move there, or a quick scalp for a point, down there. So that's awesome, man. Oh, thanks, Steve. Really appreciate you, man. I wouldn't say expertise, but just hard knocks type stuff, So nice job, Yolo. Yeah, man, and I'm proud of you, man. Like bank gains. I mean, anytime something moves like that, I mean, and it breaks, take your take your money and run, right? You can always trade something else, another good setup, right? That's the thing, is don't let your green trades go red. I'd rather make $1 on a trade than lose anything, but then lose like 100 just because I was like stubborn with my stop and stuff like that, right? So once you go green, hang on to it, and there's always another trade you could take, right? Hey, what's going on, White Donalba? I've got Bud and AEO double inside 60s. Can you look at these? Yep, absolutely. Bud is interesting, right? Because it became like an ADR, right? Used to be an American company, and now it's what I don't know, Brazilians or something. But anywho, yeah, look at that. It had a nice day today. But let's go. Let's look at the daily real quick. I mean, obviously we're we're downtrending, but it did perk up today. I can see that on some volume. So what did it do? Okay, so it gapped down, right? It was an earnings gapper down, and now it looks like it wants to keep testing in this gap. So just be careful. I mean, I wouldn't put full size volume into this type of thing, but it looks like it could continue to try to test in there. So just be careful going into it. But yeah, if it were to rip, it would be good. And look at that, like you said, double inside 60 to close. So just see what happens with this. With these ADRs, they gap all funny, right? Because they correspond to wherever it is, like European closes. See, it's like gap, 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 gap. So just be careful with these, but definitely worth watching. I mean, you'll probably end up gapping like up there, so it's hard to really trade off of that. But it does look like it wants to try to get back in that earnings gap. So, and let's see, AEO. Yeah, this is I've traded this before. This is a good stock to trade because it's cheap, right? It's $20, it's liquid, and if you can catch a move on it, look at that. This is interesting. Gap down. Did it fill that gap? Low 2303, high. Yeah, 2310. So it went gap down, slowly filled the gap up. Now it's 1, 2, 3, 4 days under the 200-day moving average, and look at that. And you're train tracking on the 5 and the 10 MA, right? So they're both heading like down this way. So what it did was it hit the 10, and the 8, and reversed right off of that and came back down. So this is looking really bearish, right? And that's good. I mean, because we're in a bear market right now. I mean, it has switched over. There's no doubt about it, right? It used to be buy the dip. Now it's sell the rip, right? So, I mean, anytime you get a thing like this where it's like hitting some resistance or a key moving average, there is an opportunity to short there. So just remember, just do that off the daily, because my hourly time frame is, you only do it if you only short if you're under the VWAP, and you go long if you're over the VWAP, right? So American Eagle, I think you're going to do well with this one tomorrow, because you're double inside 60, like you said, you're under the VWAP, and this is not the type of stock, unless there's some news, is going to gap, right? So see where you open. It might do a little bit if the market's up or down, but use this as your anchor point. Like you said, trade it if it breaks to the upside and you're over the VWAP and the market's strong, if everything's pointing up, like your future's pointing up, if they're pointing down, right? Look to trade it to the downside, right? And use that as your stop. So that's a 16-cent stop. So in that case, when it's 16 cents, you could use the next bar up, right? Like, just give yourself, or even the next one, use the mother bar up, the true mother bar up as your stop, up or down, just to be safe, and just, size your risk accordingly for that. So yeah, I do like American Eagle. Prefer it to the downside, but obviously you just got to see what price does. So, but good job catching these 60s, man. That's good. Yeah. So yeah, guys, I would recommend whatever your trading software is. If you have free time, just go in and let's just look at American Eagle real quick and see what it's doing. Let's go to the hourly here, right? So where's the pivots, right? Where's your major pivots? So you got a big one up here. You got one here, you got one here. So we could try that, right? We could try to do it. Let's try that. Let's see how it looks. See if it's possible. Some of these are going to be like, probably going to seem crazy. I mean, it looks a little crazy right when it's down like that. And the strategy is, if it's like really vertical like that, is to look for mini ones inside of it, right? So but look at that. Right? You see what I'm saying? And see how that puts like just fresh perspective on things, right? So, I mean, you look at that and you're like, okay, cool, whatever, it capped down, filled the gap, like we were just talking about, it looks bearish, et cetera, et cetera. And then you put this on it, it just kind of gives you some perspective. And so here, look what it did. Right? Came back in, pivoted, right? Basically pivoted around the median, so failed the median. Look what it did. It tried to break that to the upside, failed, right? So overshot it, which is traditionally an even more bearish signal. When things hit it to the tick, right, like Google did, it's like you almost want it to go over a little bit, just to overshoot, so it comes back in, right? It really comes back in, so it really tests outside of that resistance. But here, right, look at that, came back in, hit that, and look at how it's following this down right here. And like you said, here's your inside 60, double inside 60. So if this breaks to the downside, maybe it'll test it here again, breaks through that, might want to come back down to the median too. So, and then, you go to your longer term time frames and see what your major pivots are, right? And so here, you can see that you've got some support right here on these pivots. You got 1, 2 pivots right here. So if you You know, and you can do whatever you want. You know, draw. Hello. Ah. Why? Why is it doing that? There we go. You got some resistance there, or some support there. So you've got, you know, room to go. I mean, it's got stops it can take out from major players that are, you know, here, right? Because, you know, that's where big time investors sit when things go, and then it's coming back in. They're like, okay, well, I'll only unload my position if it takes this out, right? And so, so another thing you could do is, let me just look if I can do volume profile real quick. Profiles, volume profile. So you go there, apply. Then you can see that's your volume profile right there. So right in this area here is kind of like an air pocket. And so if it did hit this resistance, right, it could probably get some steam to the downside, which takes you right about to here, right? And then you can see how this resistance here corresponds with heavy volume, right? There's a lot of interest there, right? So obviously if that were to break, so let's say it followed this pitchfork down and, you know, and broke to the downside, you know, you've got a big air pocket right here, and you might even be able to get to here. So did you guys see how I did that? This is your volume profile. You know, KPAC on Twitter, he uses that on TradingView, and I should probably use it more often. You can pull it up in Thinker, so it's not as elegant as TradingView, but it gives you the right idea. So yeah, so that's setting or studies, edit studies, and then volume profile. It's built in Thinkorswim. So that was that. So now we know kind of an idea in context of where things are at in the long term, and then so from there, you know, then you can trade your intraday strategies, you know, for your targets and your goals. So that's basically that. And then let's see, so clear that. And then you can look for other pivots too. And then you can kind of draw two of them and just kind of see where things overlap. But you can just see how, look, now you look at this, you don't have as much clarity. And I think those pitchforks will really improve everybody's trading. It's certainly helping mine. So thanks, even appreciate you, man. Thanks, Wait Donald. What's going on, Carl? Yeah, check out the website and then just kind of read through it, just kind of get some basics on it. And then, you know, you can check out this video and then just kind of play around with it, right? So just switch to your, again, the idea is switch to bar charts, you know, kind of zoom out, and it kind of just helps. This is good for doing Elliott wave analysis too, doing these bar charts. And see, look, that's like a clearly an impulsive wave. So let's see, so it's like a wave one. What would that be? That would be like a 1, 2. That would be, you'd think that would be like a 3. Anyway, I'm still practicing a light wave, so a little tricky, especially with big gaps like that. But usually if there's a gap, I think it's like they assume that that's a, well, obviously that was a peak, right? So that was probably your wave 5. So here you had like a 1, 2, 3, 4, 5. So that was your fifth wave. So somewhere is, it could be 1, 2, 3, 4, because it never crossed in the range. And then this was a fifth wave down. You see what I'm saying? So, but it's easier to tell on these bar charts than with the candlesticks. So it's good for Alan Andrews Pitchfork, So good stuff. That was fun. It was fun talking about kind of something new instead of just kind of just looking at charts and all that stuff. And I'll post a game plan in a little bit. Hopefully it'll help you know, give some perspective for tomorrow and some thoughts. Again, just trade profitably, preserve your profit. Don't let green trades go red, and just keep banking gains. And but don't overtrade, right? So only trade your best setups, right? And when the more things that you can get to correspond, like we were saying, like you know here, like you have your pitchfork, right? You've got, you know, any things that you can get to match up. If you've got like like Google was my favorite, right? Because it was one, this thing can move. If you can, you know, if you can stomach, you know, the movements and the gyrations and the option prices. I mean, you know, we've got a double inside day with an inside 60 right at pitchfork resistance. You know, so I mean, when you combine all this stuff, right? It only makes your trades, you know, a higher percentage, and that helps build confidence. So, so yeah, so good stuff. Wish you guys the best, And yeah, it just gives you perspective, right? You know, because when you take it away, it looks totally different, right? We look at that, you're like, oh yeah, that makes sense. So yeah, so just play around with it on stocks that you like, and hopefully it helps your trading. So, and that's about it. That's all I got tonight. So you guys have a great trading day tomorrow. I should be online a little bit in the morning, so hopefully I'll be able to trade the open a little bit with you guys and tweet some things out. And but either way, I'll talk to you guys tomorrow. All right, have a good night. Bye.